Hello, YouTube, and welcome back to the Dividend Portfolio. Today I'm going to go over the performance. It is Sunday, November 16th. We're just past halfway through the month, and we're going to look at the returns we have so far, some changes I've made to the portfolio, and how that's going to change the dividends, and let's go forward from here. I'm also going to go over the performance of all of the funds. Uh, Once again, this is not financial advice. This is just some education and entertainment. Uh, Please see a professional before making any sorts of um, investment decisions. You can lose money, and this is just part of a larger portfolio, so I'll get into that today. And like I said, it's November 16th. Currently, we have $174 in dividends, and that brings our total for the year to 1,174. And these are all the dividends that we've gotten so far this month. And I think the last video um, covered up to here. And there aren't a lot of new ones since the last video. And there's some reasons for that. And there's some changes to the portfolio having to do with some risk adjustment. So I'll just jump right into that. Um, Down here, these are all the funds that I was holding, and on the left side, this number is the balance, like how much of the fund, the total portfolio the fund takes up. I am going to do a rebalance because I have sold out of both of these positions. We're going to look at them. Basically, one of them had just broke even, and one of them was, I think, a little bit in the red once you add in the dividends. And I've said for a while these were risky positions, and they were optional. They're higher dividend paying, but they're definitely riskier. And after I think I broke even on YMAX, and I was just dipping into the red on ULTY, and I got out. And I'll share some reasons why I did that, and then I'm going to go over the performance of everything else that I hold as of today. So first, let's look at ULTY. So ULTY, huge dividend payer, and both of these paid weekly. And I'm not tracking to that fine a detail, but I'm pretty sure these payments here, this 47, 28, 32, some of these bigger, this other 32, I'll highlight these here. Um, I believe these are YMAX and ULTY. So this big $47 payment. Oh, this might have been something else actually. I think actually this one was SPYT, which is still doing great. But the 32s, here there's a 32, a 33. I am 99% sure those are ULTY, and they're paying weekly. And I got rid of it, and I'll show you why. So this is on Yahoo Finance. This is ULTY. Now, I knew this was trending down. I originally bought in um, around between April and May, so kind of at this dip here. And we actually did see some gains for quite a while, and there was this whole thing where they were changing their strategy. And I was riding this trend to the right, down, down, down. I moved the screen a tiny bit. Year to date, it's down 53%, but like I've said, if the yield is 121%, then we should be making up the difference, even if the total part of the fund goes down. However, I know that ULTY is in not only their strategy, but in their holding and playing with some higher risk assets that I think are more shaky these days. Um, so it just kept going down, and looking at some larger market trends, I decided it wasn't a good idea to stay in it. And I'm not going to look at all of their, I don't know if I can look at all of their assets. Yeah, I think maybe I can here. But, anyways, some things you may have heard of in the news. So Robinhood is fine, but Palantir, Rocket Lab is a space company, CoreWeave is AI, Coinbase is Bitcoin. I think they have some other AI and just some risky plays. A lot of technology. I think this might show. I know there's always a place you can see all of their holdings. Get quote top, blah blah blah. Um, this is not the place to do that. But either way, I think they're quite involved in AI, space, and Bitcoin. And if the market is going into a larger downturn, then I see this just continuing to go down fast, and I don't want to be a part of that. Next is YMAX, which I did also sell out of. So let's look that one up. YMAX. And this is just going to be, if I remember correctly, very similar. Um, let's do the 1 year. So again, I was buying in this area where it was low and then up to this midpoint. And we had some more significant drops between August and the end of October. And, I'm still getting this 60% dividend yield. And then it just started to really go off a cliff. So it held up better for longer than ULTY, but again, let's see if I can look at the holdings. I think this is very similar. Yeah, it's in Tesla, Robinhood, Palantir, AMD, just a Bitcoin, AI stuff, all this stuff that's kind of generally, getting not great news, maybe in a bubble, something like that. As we move away from riskier assets, I am worried that these are going to continue to go down significantly. And I don't even really like Tesla as a holding because of their PE ratio. Either way, um, pretty sure I just basically broke even on this. So, which is breaking even. It is a loss at the end of the day because if you have money um, for 9 or 10 months and it breaks even, then you lost compared to inflation and you lost compared to other things you could have put the money in. But that is investing. So those are the two positions that I'm done with, and that's okay. I can have riskier investments in other places, in other portfolios. So let's, I'm going to stick more to the core of what this is and continue to learn and see what else is out there. In good news, SCHD and SPHD have definitely seen their performance go up as the market is getting shakier. These two funds, SPHD and SCHD, are generally positioned with more like larger consumer staples, and I think they're seen as safer. So as some other things have seen some weakness, these two have actually gone up recently. So I will reweight these because obviously I sold these and all I did was I just rotated them into other holdings. I'm pretty sure SPYI, QQQI, I put them in stuff like that. So um, these annual yields are pretty much the same. And but thing is, so as far as the monthly dividend, um, kind of like I did before with where we saw like this $105 dividend payment, we won't see these weekly $32 dividend payments without these positions anymore. So this is going to just be moving even more towards a more conservative portfolio, you could say. Um, I'm not sure when we're going to hit uh, $300 in a month again. I think we're going to get up to 200 again, but this is I'm just being open with how things are going here. So we're halfway through the month, and I think we'll hit $200, but that, we'll see. And I still have auto buys on. I think I upped the auto buys a little bit into spread across all of these. So the last thing I'm going to do is show the returns um, on the rest of these that I am holding. So let's see. Here's a screenshot these are screenshots out of Robinhood with these holdings, and I'm going to move this to the other screen and then just fill these in. So the performance so far for the year, I believe this doesn't we have to add the annual dividend yield on top of this essentially, but we want to know, are these breaking even? Are they tanking? I know like the performance for YMAX and ULTY, YMAX was like down something like 25% and ULTY was down something like 30%, and it was just I did not want to keep taking that. With the dividends that had come in, it was basically broke even. Okay, so JEPQ right now is up. I wonder if I can do like a plus. No, it's going to do like a. I'll just turn them different colors, I guess, at the end. Anyways, this is 4.48%. This is SPYI is 1.65%. QQQI is 2.26% in the green. GPIC is up 4.22% in the green. Then we have JEPI is 0.8% in the green. IMWI is, I got into this position much later, like I've only held this like a month, I think, up 0.8%. SCHD, which did dip quite a bit when I got into it, but that has rebounded quite quickly, is up 0.67%. JAAA is down. I do, yeah, negative 0.14%, so it's basically very close to break even. SPHD is down 1.21%. JBBB down 0.89%. CLAWS down 0.4%. And SPYT is down 1.74%. So let me color code these real quick. Cool. So with the holdings that are left over, this is what we're looking at. CLAWS, that's basically what I expect. I don't expect it to deviate very far off of 0.4. Same thing with J triple B, J triple A. I don't expect to deviate much at all. So these three, I'm expecting to not even get more than off of up or down 1%. These are really just for paying dividends, and they don't do much else. Um, IWMI, I believe, has gone up a lot more over the year, but I didn't discover this till much later. But it does pay a large 13% yield. So I think I've only had this a month or maybe a little less than a month. Um, but some of these other ones, JEPQ, I've held for quite a while. And the performance, according to Robinhood, I'm up 4.48%. And then as the payments come in, it kind of gets like, you can imagine, like factored into that. So the fund is still up, plus I'm getting the dividend payments. Um, SPYI, not up very much, but the dividend payments at 11% is great. So when you get both of these at once, it's great. Um, GPIC up 4% as well, plus the 9% dividend payment. SCHD and SPHD may, over the long run, have better performance in the fund, but the dividend payments are so low. I mean, I'm not even sure they're keeping up with inflation. So, as far as the percentage of the fund, like last time I looked at the balance, it was 2.1 and 2. Um, there might be, if these grow with the overall market better, there might be times to kind of rotate into these, but with this fund, I don't imagine they're going to be large parts of this portfolio just because the dividend payments are so low. Um, but hey, I'm learning a lot as I go. I believe I've also, when I sold YMAX and ULTY, I put quite a bit also into IWMI. So this weighting might be closer to 5%. So I'll check that out. Um, and let's see. Yeah, so we're at 174 for November, which, hey, it's higher than September. Um, we won't get as many of these large payments, and some of these were weekly. I believe, yeah, this $33, this $36. Um, these were coming from the funds that I sold out, and they were also paying weekly. So the actual number of payments should be less. But overall, the strategy is working in the sense that, a long time ago, I said that I was motivated by seeing many, many of these payments just come in, and I'm seeing like multiple a week. I'm not seeing as many payments come in as often now, but I'm kind of used to, what I'm doing and why I'm doing it. And now that, I'm getting closer to a year of doing this, the monthly total is, looking more important, and just preserving what I have and not letting it just like totally bleed out with YMAX and ULTY. Um, it's a cool idea, um, and I think, yeah, getting out of these at basically break even, it's not totally what you want. Where we want to make money, but we have to also look at larger market trends. Lots of good websites to do that on. Yahoo Finance is generally okay, and there's lots of different analysts and stuff, but um, the overall market is looking unsure about the next year, in my opinion. Here's the 5 year, and should be able to see that we're just at this high, and that doesn't mean everything, but um, what goes up must come down, and if we get a pullback, those riskier stocks are gonna pull back a lot harder. Um, so yeah, we can see these like recession type drops. Well, this wouldn't count, but these recession type drops can sometimes last a long time, and they can be quite sharp, and it doesn't go up forever, right? So, anyways, this is the portfolio for today. I still have auto buys on, and we'll see if we hit $200 by the end of the month. I'm not sure what other payments are supposed to come in, um, but I still think the total for next year is going to be $2,000. So we'll see how that goes.